Hi, you're listening to the Stefan Livera podcast. For episode 233, regular guest Vijay Boyapati rejoins me on the show, and he is the author of The Bullish Case for Bitcoin. And so today we're talking about possible valuations for Bitcoin, as well as some common misunderstandings that people have, and just some common errors in thinking that people have around bull runs, which I'm sure you will enjoy. This show is brought to you by swanbitcoin.com, the best place to auto-stack your Bitcoin in the US with incredibly easy setup and low fees. They've recently announced availability in New York, so they are now available in all 50 US states. So if you've got any new coiner friends, now you don't have to worry about whether they're in the right states for it. All US states are covered, and Swan have some new features like XPub support, which you can use with a hardware wallet, for example, and automatically withdraw to a new address each time. Swan's service is built around regular stacking, but if you want to wire money in for a special smash buy, support is coming for that soon also. They're Bitcoin only, and they're focused on teaching people to self-custody, so make sure you send your new coiner friends there. Go to swanbitcoin.com/New York to sign up. Nox is a Bitcoin custodian dedicated to ensuring their insurance protection covers the full value of their customers' assets. For example, suppose a fiduciary wants to hold $250 million of Bitcoin with Nox. Nox will seek to obtain $250 million of insurance dedicated exclusively to that account and adjustable to volatility. No fractional coverage or narrow scope. Insurance for what it's worth. A tool to transfer risk. If you are a Bitcoin company, investment fund, trust, or family office, check out Nox for your insured custody. That's noxcustody.com. And speaking of bull runs, have you got your backups sorted out? Go to cyphersafe.io, producing the Cypher Wheel product. This is a metal backup seed product. So if you've got a Bitcoin hardware wallet or you've got a seed, don't keep it just on that piece of paper. Make sure it's fireproof and waterproof and rustproof. With the Cypher Wheel, you slide in the tiles to keep a backup version of your seed. And in doing so, you can make sure that you or your loved ones have access to your Bitcoins if an accident occurs. So go and order yours at cyphersafe.io and use the code Livera for a discount. Vijay, welcome back to the show.
Thanks, Stefan. It's great to chat with you as always. And I hope I'm keeping my record as being the guest who's been on your show the most. That's a very important record to me because it was the first podcast I did, and I still think it's the best Bitcoin podcast out there.
Well, thank you very much, Vijay. And I think you are, although I haven't checked the numbers recently, I should run the numbers. It'll be between you and Pierre, so quite fitting. So the market situation and Bitcoin it's been continually changing over time, and now it's, we're kind of getting to that point where we have to start thinking about what kind of market do we think Bitcoin is competing for. And so you had a great thread around valuations. I'd love to get into some of that. So I think it would be good if you could perhaps spell out what are some of the high level valuations that we could think of for Bitcoin.
Yeah, absolutely. And to give a little bit of context, my background is in Austrian economics. I'm a computer scientist by training, but I spent a lot of time studying Austrian economics. And when I first came across Bitcoin in 2011, the question that most interested me was, how does this have a price at all? That's this question that economists really should be studying, is how a price is set and how they formed. More recently, I've become interested in valuation frameworks, and not just how does Bitcoin have a price, but what price should you assign to it? And so I've been kind of thinking about and digging around what valuation frameworks are there out there, what have people used? And I came up with the four main ones that I've seen in my about 9 years thinking about and observing the Bitcoin market. The first framework is the one that pretty much everyone thinks of when they first come across Bitcoin, which is, this is just the Tulip Mania. This is another huge bubble. This thing doesn't have any intrinsic value. It's some crazy token that's being created on the internet. How can it have value? Eventually, the bubble is going to burst. And if you were to believe this framework, you'd probably assign a long-term price target to Bitcoin of 0. And this is the framework that you'll see still being used by people like Peter Schiff and Nouriel Roubini and Paul Krugman, and the kind of people who can't get away from that first skepticism and open their mind and sort of see that there's an underlying innovation here that's very important. So the second framework is that Bitcoin is a new monetary good, and it's clearly solved some problem because there are certain people who value it, but the set of people who do value it is limited and is limited to people who are either technologically savvy or who have an ideological affinity to Bitcoin, so libertarians, for instance. And if you were to believe this valuation framework, you'd probably assign a price target to Bitcoin of somewhere between 10,000 and 100,000, because there are still, a lot of people who fit that category, libertarians and people with a technology background, and there's a lot of savings in Silicon Valley. So that gets you, a decent price level, but it's not sort of what I would call geopolitically significant. The third valuation framework that I found is that Bitcoin is essentially digital gold. It's a better version of gold. It has the same attributes that make gold good as a store of value, and in fact, it's better than gold along these attributes, especially along the attribute of scarcity. It's a strictly finite supply, and transmissibility or transportability. It's like gold with teleportation built in. So I can transmit $100 million worth of Bitcoin across the world almost instantly, whereas doing that with gold is much more difficult. Now, if you were to believe this framework, you'd think that it totally makes sense for Bitcoin to have a market capitalization that's equivalent in the same ballpark as gold. So you'd probably assign a price level somewhere between 300,000 US dollars, which is slightly below gold, to anywhere up to maybe $1 million, which is higher than gold's market capitalization because you believe that it serves the same purpose as gold, but it does so in a better way. And the final framework that I've seen is that Bitcoin becomes the world's monetary base, the global reserve asset that nation states and large financial institutions keep their savings in. And that is a model which sort of views Bitcoin as serving the same purpose that gold served in the 19th century, when gold was the reserve currency of the world. And if you were to believe this valuation model or framework, you would basically have to assign a price level to Bitcoin so that all the Bitcoins added up to the total global wealth. And that gets you to a price level somewhere in the order of $10 million per Bitcoin, or higher than that as the global economy grows.
Yeah, so I think it's I want to go back to the Tulip Mania kind of idea. So I guess thinking of what someone like, the typical skeptics nowadays, someone like Peter Schiff, who just can't get past, the subjective theory of value. I guess at the kind of, if we had to push it to the maximum level, what those kinds of people could say is, oh, well, see, you're just living through this kind of bubble period, and it might be that it just, the bubble hasn't popped yet. And I suppose our answer, well, at least the way I would think of that, is more like, well, hold on, were tulips able to be sent around the world? Were they strictly scarce? Did they have all these additional qualities? And I think the other point is just that, really, with these kind of past bubbles, tulips and South Sea, etc., it's not that they were like, it kind of died and then just re-rose again and again, wouldn't you say?
Yeah, I completely agree. I think the second point is really important. Historically, there are no bubbles that I'm aware of that burst and then came back and then had another popping and then came back. But each time they came back even bigger. I'm not aware of any such bubble, and one that continued for an entire decade. It's just it would be historically unprecedented. There's clearly something valuable that's being created here, and a clear technological and monetary innovation. So it's sad that after 10 years, people are still using these analogies. I can understand maybe in the first 2 or 3 years, someone might see it and think that way, but after a decade, you really are not thinking critically if you believe that valuation model.
Yeah, and it's probably also fair to point out that just living in a fiat money world with, awash with credit expansion might be a harder point to come back to say, well, what if every asset is being pumped by this fiat, central banking and fractional reserve? Could it be that Bitcoin's value is being artificially pushed up, but also everything is being pushed up by that?
Yeah, I think that's a fair point. I do think that all assets are being inflated by the fact that the total amount of fiat money out there has increased tremendously. But when you get into a situation where the inflation gets out of control, people will flock to the most liquid goods first, the things that are the most tradable. So if you look at the Weimar hyperinflation, yeah, people fled uh, the Rentenmark to real assets, things like uh, food and real estate. But the thing that they preferred the most was gold, and gold skyrocketed during the hyperinflation because it was the most liquid tradable good. And I think that's what you'll see if we get into a situation where the inflation gets out of control, that people will flock to the most liquid globally traded good, and Bitcoin is really fits the bill quite well. It's deeply liquid. It's traded across the entire world. It can be transmitted across the entire world. Gold's sort of similar as well, but it has a disadvantage that um, transmitting it is very difficult. And I'll give you an example of one case where this might be important. Imagine if you're the leader of a nation state that's not viewed very favorably by the United States, and you've essentially been kicked out of the global monetary system because the US doesn't like you. So, for instance, Venezuela, and you're running out of savings, your nation's running out of savings, and you want to repatriate your gold. You don't hold your own gold because it's hard to move gold around, and you've trusted for a long time that the gold you had in the Bank of England is your gold, and you can get it when you want. And you ask them, can we have our gold back? And they say, no, you can't have your gold back because we don't like you anymore. That is a situation where there's a huge advantage in having Bitcoin versus gold, because the gold that you have is hard to move around. It's hard to pay other nations with because you have to physically transport it. So if you're a nation which has become a pariah, there are huge advantages to holding Bitcoin versus gold.
Yeah, and so moving up to the next valuation category or bucket, if you will, the new monetary tech for the tech savvy cypherpunks and libertarians. I'm curious what you think there, because I guess some people could say, oh, well, fine, Bitcoin might be this useful tool, but in reality, it's difficult to use. And to me, I think that ignores the reality of what this is, right? If it's a better money, well, then people will make better technology and better user experience for that. And really, what's driving it is what was the better money, not what has the best UX, if you will. But how do you think about that?
Yeah, I think you're absolutely correct. The fundamental problem is making a better money. The user interface is something that takes time, and the same thing applied to the internet, for instance, as a comparison. Bitcoin is only a decade old. If we were to look at what the internet looked like a decade after it's really begun being used in the way we think of the internet today, that gets you to the early 2000s. And I don't think many people back then really appreciated how important the internet was. It really took another decade, 2010 and 11 and 12, when people recognized that this is uh, going to be profoundly important to the way the world economy works. And I think the same thing will be true for Bitcoin too. We don't fully understand how it's going to change the financial system, but it seems important, and it seems a little difficult to use. And the internet was still difficult to use in the early 2000s, and the internet penetration was still quite low. Uh, but in time, the technologies to make it more approachable and easy to access were developed. And they were developed because the underlying thing that had been built was very, very important. And the same thing is going to be true for Bitcoin. We still see a lot of innovation and companies coming into the space, trying to make it easier for people to use. And I think one of the areas of innovation that we're going to see a lot of work in over the next, say, 3 to 5 years is making it easy for people to self custody and to feel confident holding their own coin and sort of reduce the mental burden of managing your own private keys.
Yeah. And speaking of the demographics as well, I think even if you just looked at libertarians only, we haven't even hit saturation even in that demographic yet, right? There are a lot of libertarians who are not into Bitcoin. Maybe they got confused by all the Bcash stuff, or maybe they hold a very small amount of Bitcoin. They haven't actually really dived deep into this and actually taken a significant position into Bitcoin, wouldn't you say?
Yeah, that's a great point. That's one I hadn't even thought about. The penetration, even amongst the demographic who should be most sympathetic to Bitcoin, is still fairly low. I mean, I don't have a specific number on the top of my head. I would imagine it wouldn't be more than, say, 30%. So there's still a lot of room to grow in even the most sympathetic demographic. And so that gives you a sense of how much opportunity there is, how much upside there is amongst other demographics who don't really even think about these issues or why they're important.
Right. And I think also from a cycles perspective, and I'm sure you have probably noticed this perhaps even in yourself and also in your observations of other people who are in the Bitcoin world, is that oftentimes it just takes time to build some conviction. And it might need a full cycle, at least one, maybe even two cycles before someone has built up more of a conviction into holding a significant part of their wealth into Bitcoin rather than, let's say, the dipping your toe in. And so I think it fundamentally is just going to take time for enough people to have gone through a cycle.
Yeah, and I think this is something that we've spoken about in one of your previous podcasts. I've talked about on Twitter the psychological process of becoming open to or curious about Bitcoin and being willing to allocate some of your savings to it. And I talk about the idea of touch points, which is the number of times you've heard about Bitcoin or someone you trust explaining it to you, or having a small allocation to it and seeing that allocation increase in value to the point where you are curious and you dive down the rabbit hole. And for some people, the number of touch points they need is much higher than other people. So, for instance, I heard about Bitcoin twice, and that got me interested. Partly because the people who told me about it I really trusted, and partly because they were sort of explaining something in fertile ideological ground. I was, a libertarian. I am a libertarian, and it was something that, and I'm interested in economics and monetary theory. So, when something like Bitcoin comes along, I'm pretty receptive to hearing about it. But for the average person, it may take 10 or 15 times before they think, hey, I keep hearing about this from my friends. Why don't I put a little bit of time in and figure out why this is important? Because I don't want to be the last person on this bandwagon if Bitcoin becomes really big. Or it could be that a person has been gifted some Bitcoin a few years ago and it was worth $100 a few years ago, and now it's worth $1,000. And that alone was enough to pique their curiosity to the point where they're now going down the rabbit hole. And honestly, I can tell you from my own personal experience, this has happened among family members, people who I've gifted small amounts of Bitcoin to over the years. And they've sort of, their curiosity has grown with the price, which is, kind of natural as well.
Yeah. And I'm curious as well. So I know you, a little while ago, you went on Tom Woods' show to talk about Bitcoin to his audience. And it's just a funny thing because it seems like libertarians should be all about Bitcoin. And yet so many of them are not. Why do you think that is?
Yeah, that's a good question. And I'm going to say something controversial. I didn't expect to say something controversial on your podcast, but I'm going to assign the blame here to someone who I otherwise hold in high esteem, and that's Murray Rothbard. And I think the problem stems back to a misinterpretation of the Miesian regression theorem, which is a theorem of how does money get its original value. And I think Rothbard was the first person to really take Mises's regression theorem and misinterpret it in a way that said money can only evolve as something that starts as a commodity with real utility. So, you know, something that you can use to dig holes, or um, something used for jewelry or something like that. And I think that was a big mistake. And if you look in the Austrian community, a lot of people clung to that idea for many years. And some of the prominent Austrians still haven't fully grappled with it and haven't fully figured out that that interpretation of the regression theorem is wrong. So that's at least my thinking on what happened in libertarian circles. There was that initial skepticism and dismissal and debate about, hey, can this thing be money? And I think a lot of people became hostile because of that debate, because debates like this can often get heated, and I think there was some animosity that was created in the libertarian community and in Austrian circles. It's unfortunate. I think when I look at Rothbard's writing, I think he was a brilliant historian and a brilliant polemicist and a great sort of motivator to bring people to libertarianism. But I don't think he was the same caliber of economist that Mises was. I think Mises was a giant, and really several of the things that he worked on were revolutionary. And I think this is just a case where something that he believed was sort of um, misinterpreted and twisted a little bit. And I don't think Mises himself would have looked at Bitcoin and said, "This can't possibly be money. This thing is like a Ponzi scheme or something like that." I think Mises would have been much more curious and would want to have understood what it was and how it got value in the first place.
Right, and that may well be true. That this confusion around the regression theorem was what led many Austro-libertarians to not go down the Bitcoin rabbit hole, as it were. But I suppose the other point there is that a lot of libertarians are not necessarily Austrian. So I guess for some of them that wouldn't even matter. So what about the non-Austrian libertarians? Even though you and I are in that camp, what about those other non-Austrian ones? Why aren't they into Bitcoin?
That's a good question. I guess I don't have a general answer for you. I'd need to look at the specifics of particular people and why they're dismissing it. Uh, it may be that they're just slow. Some people are slow on the uptake and recognizing that something is important. It's kind of like investors in a way. Some people are quick and they see that something is important and they move quickly to take advantage of that. And some people are just slow. And I think probably the same thing is true in libertarian circles as well. Libertarians, on average, my guess is they're more curious and more intelligent than the average person, but there's probably still a spectrum of levels of curiosity and openness, and there's probably a whole bunch of people who are just naturally not that curious about new technologies.
Yeah, yeah. And it could also just be that, look, it's technology. It can be difficult for people if they're not a tech savvy person. But I anticipate a lot of those people will come in over this next cycle or so. And with the gold idea of Bitcoin being something in that range of valuation, as you said, something like 300 to 1 million, or 300,000 to 1 million, that is. Um, I wonder then whether we start to get into that, we could potentially hit close into that range at the top of this cycle before crashing back down again. Uh, do you have any thoughts on what changes in the broader, let's say, investment world if Bitcoin were to get close to that kind of valuation?
I think it's possible. I definitely think it's possible. And one of the things that I think is most fascinating, which fascinated me from the beginning when I first came across Bitcoin, is this is the first time in history that we've seen a good being monetized. The process of gold becoming money took thousands of years, and so we get to observe this in real time, and we get to learn how it happens and what it looks like. It's not a simple straight linear process. It's messy and there are ups and downs, there are booms and busts. But one of the most fascinating things that I've observed is that it sort of happens in these cycles, and these cycles are like a fractal pattern of increasing magnitude. And what I mean by that is, if you superimpose the price chart of a Bitcoin bull cycle from 2011 to 2013, if you superimpose that on the bull cycle from 2016 to the end of 2017, it looks almost identical. And that's and even crazier to me is if you superimpose that pattern on the gold price chart from 1980 to 2010, it looks pretty much the same. And what I've speculated is this might be something that's inherent to the social dynamic of monetization. And so if we do that again, if we take the price chart of 2017 and superimpose it on the current price chart, rescaled for the current price level, that would get you to, at the end of this bull market, if it plays out in a similar way to the previous one, to a price level of 325,000 per Bitcoin, somewhere in October 2021. Currently, we're ahead of schedule. That is, the price now is higher than it should be if you were to follow exactly the 2017 bull market. So we're moving faster than we did in the last market cycle. I personally find that very, very strange. I would have thought that this bull market would take longer to play out just because of the scale of the market. So I'm surprised. I think this is pretty interesting. It's cool, and it could partly be explained by the fact that the people coming into the market right now are very large institutional players moving very large amounts of money, and that's perhaps why things are moving more quickly than they did in the last cycle.
Yeah, and also on this whole idea of additional adoption, I think from your bullish case for Bitcoin, I can't remember, or maybe it was one of your tweets. I think you were saying something like this cycle, this whole thing might take 50 years. But it seems nowadays, the way I'm looking at it now, it might actually be 10 or 20 years from now. Do you have any thoughts on that kind of timeline idea of when you would anticipate we see this kind of final full global adoption?
Yeah, so for a long time, I've been kind of agnostic to price movements in the short to medium term. I haven't had strong predictions on what would happen. I'm as bullish as anyone on Bitcoin in the longer term, say 50 years. I think there's almost an inevitability to it becoming a global reserve asset. Um, but recently there's been a lot of analysis done by Plan B about um, Bitcoin being adopted in a very sort of predictable way. And to be honest, I was kind of skeptical that something like that could even be possible, because it almost violates what we as Austrians think of as there being no statistical laws that you can sort of rely on, that all action can be changed at any time, and it's all market dependent and dependent on the actions of individual in the particular time period. Uh, but the analysis that Plan B has done is very interesting, and it's eerily accurate. It's almost scary to see how accurate it is. And if anything, I think Saifedean may have said this. This might be the first sort of statistical economic law that anyone has ever created. And if it's the case that it follows this same pattern into this bull cycle, I think Plan B might be up for a Nobel Prize in economics.
Back to the show in a moment after this message for the sponsors of the show. Unchained Capital is building Bitcoin native financial services on a foundation of multi-signature. They've got multi-sig vaults, and they're designed for ultra-secure long-term storage with no setup or storage fees if you build them on your own. But if you want additional help, if you want white glove treatment, their team will teach you about multi-signature. They'll ship you 2 hardware wallets, answer your questions, and deposit $1,000 of Bitcoin in your vault, called the concierge service. And if you use my code Livera, you'll get a discount on that also. You can buy Bitcoin through their OTC desk for purchases $50,000 or higher straight into your new vault. And that's an option for self-directed Bitcoin retirement accounts, or if you're a company looking to move Bitcoin into treasury. They've got advanced business accounts OTC desk, and concierge service that can help you move your corporate treasury to Bitcoin, where your team controls the private keys. Check them out at unchained-capital.com. And finally, Lend at HODL HODL is a global, non-custodial, Bitcoin-backed lending platform that allows you to lend and borrow anonymously on your own terms. HODL HODL offers a peer-to-peer lending solution, ensuring a secure and transparent collateral storage system by providing a unique multi-signature escrow for each deal. This is a way to grow your savings and earn attractive returns on your investment. So if you have any stablecoins lying around, create your offers and earn some interest by lending on Lend at HODL HODL. Or if you are a Bitcoiner and you need some liquidity, you can borrow stablecoins and keep on hodling. With HODL HODL's Lend platform, you set your own terms and put up offers depending on how long you want to borrow or lend and interest rates. Go and check it out at lend.hodlhodl.com. Right, and as you say, generally speaking, in Austrian economics, it's not that there's like some statistical laws that we can divine through statistical analysis. But I suppose maybe a Safedeanian counter to that point would be something like, now that we have this monetary set point of 21 million, maybe that really does change some things about the way economics works, because now the total supply is known, or at least the eventual total supply is known.
Yeah, I mean, perhaps the fact that people's expectations about that supply are sort of becoming more and more confident over time is one way to explain this growing belief that stock to flow is a valid model. And there may be a feedback loop here as more and more people believe that the model is actually correct. It follows the model even more closely. So that would be an interesting thing. We're learning, and I think it's really good for us as Austrians to keep an open mind and be observant and watch the market and see how things play out. I probably am not quite as confident as Plan B in the model. I'm open to it being correct, and I think it would be absolutely incredible if it was correct. My bullishness is more for the longer term, and I personally always urge caution for anyone getting into Bitcoin to think about this as an opportunity that they should have like a decade horizon on. Buy some so that you don't feel uncomfortable with the amount you own, and just forget about it and come back in a decade and see where you're at. Uh, I think it's a little bit dangerous to think that you can buy something and next year it's going to be up 10x. If it is up 10x, that's fantastic. That's great for you, and it's great for the whole community. But don't come into the space predicated on an assumption that that's true. Be cautious, be patient, and read as much and learn as much as possible to increase your conviction so that you feel comfortable owning Bitcoin for a long period of time.
Right. And with this cycle, I think the narrative has shifted as well. That, or at least it's more like people have settled down onto more like a store of value long-term narrative, where perhaps historically it was a bit more confusing. And there were other ideas around what possible narratives there were. Like, is this a crypto world, or is this some other thing going on? Where now I think there's at least a stronger contingent and a stronger messaging around what Bitcoin is.
Yeah, I think this is the first bull cycle when we have the correct narrative. There have been, like you say, a whole bunch of narratives floating around. There was one for a while. Everyone was all about blockchain is important, but Bitcoin is not. And within the Bitcoin community, I think the big important debate was, what is Bitcoin? Is it a payment technology? Is it a payment rail? Or is it a savings technology? Is it something more akin to digital gold? And that debate really came to a head in 2017 with the big split of the network. And I think the important thing is that split really resolved one of the biggest risks for Bitcoin, which is, what is it? We're not really sure what it is, and there was a big risk at the time, a perceived risk amongst investors that uh, the whole thing could fall apart because the community couldn't get together. What happened, in fact, is when the network split, the market overwhelmingly voted for Bitcoin as digital gold, as a savings technology, as a reserve asset. And the fact that that was resolved, and now we've sort of gotten past the whole idea that blockchains are important and Bitcoin is not. This is the first bull cycle when people, I think, now generally view Bitcoin as a fantastic store of value, and they also recognize it is the only blockchain of any significance or any value. And that's incredibly important. I think having that narrative in place is going to be enough to get us from where we are now to Bitcoin attaining and eventually eclipsing gold in market value. To get it beyond that, to get it from gold to being the world reserve asset, the narrative might need to expand or be improved in some ways to bring along skeptical nation states or central banks. But having the narrative we have now is enough to get us to being digital gold, in my opinion.
Yeah, and also this is a point I have mentioned as well around what we might call order of operations, right? So it seems that there's a lot of, if we look out into the more shitcoin and crypto world, they are often talking about DeFi, and as though you need to have all these kind of fancy, complicated financial instruments, and you can't do that on Bitcoin. Therefore, that's why we need a shitcoin for that. And I mean, to me, the way I've always thought about that is more like, well, we need to get the money right first, and Bitcoin has a lot more growing to do before those things are 100% necessary. So you can experiment with them, and to some extent there is some level of Bitcoin DeFi nowadays with things like hodl hodl lend, sponsor of my show, but also other things like lightning pool, and this idea of getting return for being a routing node and things like that. What's your thoughts on so-called DeFi and its potential importance to Bitcoin, and when that would even become a relevant factor?
Yeah, I like the way you frame that. I think you're right. You need to get the foundation set before you start building the rest of the house. And I feel like some of these other projects, they're really experimental. I don't take them seriously at all. They're sort of working on the roof before they have any kind of foundation. I'm personally very skeptical of the whole DeFi movement, or like building this kind of stuff on Ethereum, because one thing I think is underappreciated is that whenever you have any contract which um, makes reference to something in the physical world, or some entity that can be coerced by the state, then having it in a decentralized system doesn't really help you much. And I'll give you an example. So in 2017, there was this huge ICO boom when people thought, hey, this is a really great way to build these contracts which are on Ethereum, and we can raise money and we can do it completely outside of the purview of any regulation. And I think that was, people were quickly disabused of the idea that that was possible, because companies that are running and raising capital and have an office can still be subpoenaed by the SEC, and they can be physically coerced. And if you have a business which is using these contracts, or you have some physical object which uses a contract, those things exist in the physical world and can be coerced. So I think the use of decentralization in those situations is almost like decentralization theater. It's not useful. It doesn't help. There's no advantage of doing those same things with Amazon Web Services and using a Postgres database. I don't see the advantage there. In fact, it's much less efficient to do it on something like Ethereum. It's only in the world of money, which is sort of ethereal and doesn't need to have physical form, and can be transmitted and transported around the world, that I think it makes sense to use a blockchain.
I see. And so I guess one interesting counter example there might be something like Bitcoin DLCs, right? But I suppose if I interpreted your view right there, I guess you're kind of viewing that like that's a bit more of a sideshow compared to the the main stage, which is Bitcoin as money.
Yeah, I think so. And I think there are, businesses that are building on Bitcoin and building sort of financial products on Bitcoin, like lending and derivatives and things like that. Uh, I have not yet seen an example where that's being done in a truly decentralized way on top of Bitcoin. So something like BlockFi, that's a company that's building these products, lending products on Bitcoin. Those products, I think, are totally fine, and but I think also BlockFi is a company that can be coerced in the future. If the government says we don't want these products to exist, they can just go shut down BlockFi. Um, it would be interesting to see if someone could build a truly decentralized lending market on top of Bitcoin and have market interest rates being set in a decentralized way. If that's possible, that's fantastic. I don't believe I've seen that yet.
Right. Typically, it's needed some kind of entity to help facilitate. And maybe that is good enough in terms of people having service and having someone they can talk to and figure out how to use it with. Um, so, yeah, I think.
Yeah, that's it. I just want to sort of cover what you said just now a little bit more. There's an example of something called wrapped Bitcoin, where you can wrap a Bitcoin and trade it on some Ethereum markets. But the wrapping process actually requires you to set up an account with um, what's the business? BitGo. Already the whole point of having a decentralized system of trading wrapped Bitcoin, as it's called on Ethereum, is kind of a farce, because you're dealing with a centralized authority already, and if BitGo gets raided, then that is gone. The wrapped Bitcoin that you're trading on Ethereum is gone. So it's kind of theater to do that and to do it on Ethereum when you could do the same thing just by creating, a web app and just using a database to trade bitcoins back and forth, just like you could trade bitcoins back and forth with someone on Coinbase.
Yeah, and I'm also sort of related, but I'm also curious to get your perspectives on stablecoins here. So obviously, I don't view stablecoins as any kind of monetary competitor with Bitcoin, but I guess I've seen different perspectives in the community. Some are bearish, some are bullish. Some view stablecoins more like they might be the grease that enables people to kind of get in and out of different exchanges, or a stepping stone for people who want to try and start with those before then getting into Bitcoin. Do you fundamentally view stablecoins in a similar way, or are you kind of bullish or bearish on them?
I think they sort of they aid the on ramps. They aid people in being able to get fiat money into Bitcoin, especially in places where it's not easy to get. Uh, if there's an exchange which only takes dollars, it might be easy to use Tether in a place where dollars are not available in your country. Uh, in general, though, I just sort of see them as money substitutes for fiat currency. I don't think they're particularly interesting. Uh, it's just that you can trade them digitally. They're still completely centralized, which is that they're missing the property that makes Bitcoin interesting and makes it useful as an uncensorable digital store of value. Is that uh, it's not centralized. There's no central party that can roll back your savings in Bitcoin if they wanted to. With something like Tether, I don't believe that at all. I don't. It's entirely possible that the company that runs Tether could be shut down and all your savings are taken away. So I'm only I'm only positive on them in the sense that they make it easier for some people to get their fiat savings into Bitcoin.
Right, and from what I know, it seems like exchanges typically like having it just as a way to help people in and out as well. And there are some people who just view it like, I just want to be temporarily in that stable coin and so on. And so they're trying to minimize the amount of time that they're in it. But I suppose there might be others who actually try to hold some of their value in Tether because they would rather not hold it in their local fiat, that kind of thing. But I guess that's kind of a
I think
different, yeah.
Yeah, one other comment. I think there are people who do arbitrage and try to make profits from the spread between various exchanges, and it's easier for them to transmit dollar value, tradable dollar value between exchanges using something like Tether than going through the banking system, because the banking system is so old and antiquated and terrible that everything takes so long. And if you're trying to arbitrage, say, a $10 spread between Coinbase and Binance, and you're trying to move dollars between them, it's much easier to use something like Tether than it is to do it through the banking system.
Yeah, for sure. Um, Also, I guess a few might be interesting to talk about a few insights in terms of how these bull cycles go, just for maybe some listeners are a little newer, they aren't as familiar, or maybe they weren't paying as much attention during the 2016 and 17 runs. But I think it's interesting to point out and note that there will just be pullbacks along the way, and people might get they might end up losing a lot of money if they're trying to call tops and bottoms and trying to trade in and out.
Yeah, if you look at previous bull market cycles, nothing happens. The process of monetization, we've already learned, does not happen in a straight line. It happens in sort of, it's a very bumpy ride. And if you look at the previous bull market cycle, there were several tops called through the cycle. I mean, there were people calling the top at 3,000, 5,000, 9,000, 15,000. And every one of those was wrong. So if you want to sort of see the big gains over the long term, you're not going to be trying to trade these things, because trade these tops, because it's very easy to get tricked and see something, see a price movement to, let's say in this cycle it gets to 75,000, and then it drops down 30 or 40%. It drops down to 40,000. A lot of people are going to panic and sell out because they'll think this is the end. Bitcoin is going to drop all the way back down to 3,000 or something like that. Um, but you should, in any bull cycle, you should expect that there are going to be at least 3 or 4 drops, which are at least 30%. And if you haven't experienced it before, a 30% drop is very, very painful. Uh, and the only way you're going to survive this is if you have conviction. You go down the rabbit hole and understand why Bitcoin is long term really valuable. And you should sort of go through and listen to every one of Stefan's podcasts to get conviction. And maybe put your Bitcoin somewhere where it's hard to get it out, so it's hard to trade it. So put it in cold storage, put it in a lockbox somewhere, and just forget about it and don't even look at the price. That's what I tell people: buy some amount of Bitcoin that you feel comfortable about, and just hold it for 5 to 10 years, and don't even look at the price until then.
Right. And I think it's a common tendency for, not for everyone, but for some people to feel like they can try to pick the tops and the bottoms, or that, okay, if there's a drop, it might only be 20% drops. And then they might lever into a certain position and then actually get wrecked because it dropped more than they thought it would. And, then there's tears at the end. Whereas it's so much more simple to just simply, take a position. And, if you're able to and you've got income and you're happy, and then keep dollar cost averaging or stacking sats or auto stacking, whatever you want to call it. Just play it like that, and that's the simple way that people who've done that strategy have done well.
Yeah, a common mistake in bull markets is, I don't want to buy now because it's already gone up so much. And it's funny, a friend reminded me just yesterday of an email exchange we had going back to, I think it was 2012. And he said, I really don't want to buy Bitcoin here. It's $13. It's gone up so much in the last few days. I just feel really uncomfortable. And he reminded me of that, and how painful it was to look at that and think, whoa, I was like, I was getting worked up over a few dollars. I didn't see the big picture here. And I think Bitcoin is still an asymmetric bet. I still think it has massive upside from here. So the mistake people make is I don't want to buy it now because it's gone up a lot, so I'm going to wait for a pullback and buy it on the pullback. But let's say the price is 15,000, you wait for a pullback, it could get up to 25,000 and then pull back to 20,000, and then you've you haven't bought in. The better way to think about it is not I'm trying to find the exact right price. The right way to think about it is what fraction of my portfolio am I comfortable owning in Bitcoin, and just buy that fraction and just sit on it for as long as you can.
Yeah. And obviously, as this cycle plays out, I'm sure we will see the same characters, right? Peter Schiff, Nouriel, Krugman, whoever else. They'll come out every time there's a drop. And one thing that I've noticed really is that they're very short term focused, right? They look at this short term drop of, 20% or 30%, and then they won't look back at the actual long term where we've seen, multiples. Literally, Bitcoin has gone to multiples of what it used to be. And it's almost like there's this selection bias of people who are able to be long-term thinkers versus the people who only see things in the short term.
Yeah, I joked about this on Twitter when Bitcoin recently dropped. I think it was from like 18,500 to 17,000. I was like, see, Peter Schiff is right. Uh, obviously, they've totally missed the forest for the trees. They haven't seen the big picture. And I think just a little more cynically, I think in the case of Peter Schiff and Nouriel Rubini, I think this is a motivated dishonesty. I think they see that they get a lot of engagement from this and it's good for their brand. And so some of Peter Schiff's tweets are so inherently dishonest that I I still find it hard to figure out if he's either a dishonest person or he's just stupid, and I keep sort of going back and forth between those two. Uh, but it may be that he's actually really smart. He's figured out that he mentioned on Twitter that his number of followers has gone from like 200 to 300,000 just by tweeting about Bitcoin. That's all he tweets about, even though he's a sort of a used gold salesman. He's found out that he can get a lot of engagement by talking about Twitter, because the Bitcoin community is a very active, passionate community, and you tweet anything about Bitcoin, you're going to get a lot of people engaging with you. And I think this is going to be the first cycle when you see a lot of celebrities getting involved in Bitcoin too. So this bull run is going to have a lot of attention. It's going to be crazier than anything you've ever seen. It's going to be like a circus. So prepare your body for 2021. It's going to be a very wild ride.
And I remember even in the 2017 cycle, there were, it was like Katy Perry is coming out with her own coin or something. I can't remember exactly, right? They were all coming out with their own coin. That was the thing, right? Whereas maybe this time it'll be more like, Bitcoin Bling, or I don't know. Who knows? Who knows what's going to happen?
Yeah, I'd almost forgotten about that. You're absolutely correct. It sort of illustrates how we've finally honed down to the correct narrative. Back then, it was like all about blockchain, so everyone had their own blockchain, and that was cool. But I mean, of course, that idea is completely absurd. You don't want to have one money for buying bread and another money for paying gas. You want one money, just a single good uh, hard money, and that's Bitcoin. So this cycle is going to be completely Bitcoin dominated, and every celebrity and their dog is going to want to talk about Bitcoin. So it's going to be very, very exciting and interesting, and everyone's going to be talking about it, good or bad. And people who have been talking about Bitcoin, like yourself, for a long time, are going to get a lot of inbound media attention.
Yeah, though we will see. I mean, I guess if everyone wants their own blockchain and their own coin, there might be, it may be that Bitcoin obviously will grow a lot, and we will see less as a percentage who get fooled by shitcoins, but it might actually still be bigger in absolute terms, right? Just because of the numbers involved here. So there may still be a lot of people who get confused and go, buy shitcoins and etc.
Yeah, you're right. That's a good point. In relative terms, I think it'll get much smaller, but as Bitcoin becomes massive, there will still be some sort of fraction of people who own Bitcoin who are degenerate gamblers and who will want to try their luck in some of the altcoins. And because the altcoins are so small and so illiquid, any small fraction of Bitcoin moving into them can massively spike their price. So move them from like a quarter of a penny to like 9 or 10 pennies. Uh, and that can get certain people excited, like, wow, I can make 50x on this altcoin. But really, only a few people can make that because it's so illiquid. Anyone who was coming in with a large amount of capital would completely lose all of their capital doing that. But there will be some fraction of people who sort of fall for this, and it's unfortunate because we've gone through a couple of these cycles where we care about people and their savings, and we don't want them to be hurt. And as much as you warn people beforehand, there will still be some fraction who fall for this nonsense.
Yeah, it's unfortunate to see, but I guess just got to try to keep putting out good material and hope that people catch on to it. Also, I was interested to get your thoughts around some of the, let's call it, platform risks or technological risks around things like Ethereum, because I think it's important to just kind of spell out for people what's the difference between Bitcoin that's built and engineered to last for the long term versus the way people are building on things like Ethereum. What are some of the practices that you're seeing over there?
Well, Ethereum is exciting to a certain mindset, the engineering mindset, people who like writing code and scripting and things like that. It's sort of a Silicon Valley mindset and engineering mindset, which is obsessed with direct utility. And so they see Ethereum and they think, I can build all these things on top of it, therefore it must be useful. It's not thinking about it from a monetary perspective, and uh, the value comes from stability and credibility of monetary policy. And in that regard, I think there is no altcoin that comes anywhere close to Bitcoin, and that includes Ethereum. There is no credibility to the monetary policy of Ethereum. And you can see that because in the early days, uh, they had a contract on Ethereum, which was kind of like they sort of touted it as a decentralized venture capital fund. And then someone figured out a hole in the contract where they could steal money from this fund. And what they did was they essentially rolled it back. They forked the Ethereum blockchain so that bug was kind of, and the theft of the funds was wiped out. And that really tells you that there's no credibility to Ethereum's um, protocol being immutable. They can change it at any time, and and part of the problem there is that you have a founder, you have one person who has enormous influence over the development of Ethereum, which is Vitalik Buterin, and that's totally fine as a software project, but it's not fine as a monetary good. It's not something that you can trust. So, in regards to the credibility of monetary policy, I think there's only one coin that has that credibility, and that's Bitcoin.
Absolutely, and that's why I stay Bitcoin only, and I encourage listeners to just stay Bitcoin only and don't get tricked um, with some of these sort of charlatan-esque scam projects going on. So I guess probably a good spot to wrap up here, VJ. Do you have any closing thoughts for the listeners?
I think it's we still haven't gotten into the frenzy phase of the bull market, when it's going to become really hard to concentrate and pay attention. Anyone who's been interested in Bitcoin for a while will know the feeling that when you're going through a bull market, it's hard to concentrate on work, it's hard to concentrate on anything. I think this is the best time to, if you're building things, sort of batten down the hatches and build as fast as you can. If you're interested in investing, then spend as much time as you can digging into the important materials and how to self custody, and things that'll help you with your conviction during a bull market. One of the things I like to say is that people's conviction is tested much more in a bull market than in a bear market, because you see this, some fraction of your savings growing enormously, and it's really hard to hold on to it unless you have that long-term conviction. So before we get into the crazy phase, which I think is probably going to happen in the next few months, now is the time to spend time learning or building or doing the things that are important before you'll be completely distracted. All of us will be completely distracted once we get to the parabolic phase of the bull market.
Yeah, definitely. I think it's bringing back memories there. Listeners, make sure you follow VJ, real_VJ on Twitter. And if you haven't already, go and read his article, The Bullish Case for Bitcoin. Thanks, VJ.
Thanks, Stefan.
I hope you enjoyed the show. And just as we're going into this big run, I'd really appreciate any reviews you can leave me on the podcatching or podcast platform that you're listening on. Thanks very much for that. Make sure you subscribe because I've got a very big episode coming very soon. You can get the show notes at stefanlivera.com. Thanks, and I'll see you in the Citadels.